Hey, it's the Fintech Newscast. My name's John, and with me, as always, from his downtown loft is Steve. Welcome to the podcast.
Thank you very much. Keeping it agentic. How are you today?
Yeah, for sure. You look like you just got $10 million of seed funding, and you're waiting for the foosball table to be installed behind you.
This is my new venture called Steve.ai. We provide
Just
AI for Steve.
That's right. Dot AI. You had me at dot AI is, I guess, the quote for there. Everything is agentic these days. I think the Lego needs to update their theme song.
Everything's agentic.
Yes. Yeah. Well, I wasn't going to sing it, but I knew just a small prompt from you would take care of it. Everything is agentic these days, especially in fintech. What was that?
Yeah, no, it seems to be, but I'm curious. Even looking at the space beyond fintech, do you use any agents for your personal life? I use any John agents in there for
There,
scheduling or?
Not that I know of, but a lot of it is kind of behind the scenes, at least these new ones. Anthropic is the big news in agentic these days. News in a lot of things, actually. We won't even get into the defense row that they're having, but that just shows how important they are and how good their model is. That everybody wants a piece of Anthropic.
They do. It's also interesting if you look at it from a valuation perspective, because, as we know, Anthropic came out of the OpenAI space, right? They basically like splintered off like 2 or 3 years ago. And although OpenAI is valued at, whatever, all the money in the world, it seems like Anthropic has actually
Yeah.
overtaken OpenAI. And my theory on this is that
Yes.
Anthropic, unlike OpenAI and the product ChatGPT, is really focused on the enterprise market. So really working with banks and fintechs to do all this has been a boon to the company. And it also seems like they have the most valuable models as well. So a combination of the market and the models have made them essentially their leaders in the space.
Take me to your leader, Anthropic. That's right. Well, you know what to say. Hey, Anthropic, why are you robbing the banks? That's where the money is. That's right. That's right. And
Just
they
what they
just
say.
came out with 10 new AI agents today, Cinco de Mayo. Happy, actually, I'm in San Francisco, where we're near Silicon Valley. So people here say Happy AI de Mayo.
Oh, I've never heard that. I think you just coined a new term, a new
I
awful,
just made
awful
it up.
term.
So,
That's an
but
awful term.
I'm sure somebody at Anthropic is saying that right now.
I'm sure they are.
They're as bad at jokes as I am. But anyways, they've come out with these 10 agentic models focused on banks and financial institutions, including one, and I don't know, I guess it kind of makes sense, an AI agent that will make a pitch book for you. Wouldn't that
Oh,
be convenient?
yeah, but it's funny. I had a discussion with somebody at an event last week in SF about this. This is a person who has an agency where she basically helps companies build pitch books to get funding, and she says that even the latest models just don't have that quirkiness as of yet, and that eye for
Yeah.
design that this she claims to have had. So I'm actually a little bit skeptical about a company's ability to build a pitch book. I think they can get you the data and get you halfway there, but I think for that
Yeah.
finishing touch, you need that human person who understand how narrative and storytelling works.
Maybe it starts to look the same after a while. I mean, I guess all pitch books
Exactly.
do tend that's unavoidable
They
anyway,
do.
right?
Yeah, I wonder what is the visual design equivalent of an M dash, which you get in AI, right? Um, I wonder what that would look like. Or, it's not X, it's Y. All these tropes that you see in AI,
Uh,
a designer would know
yeah.
to kind of avoid that. But I think that an AI would just build, the same stuff over and over again because it is self-reinforcing.
Maybe that junior analyst just be replaced with a designer then that cleans things up, has some original idea that they just saw off of an AI TV show they watched and apply it that way, make it original. But
Exactly.
I guess that's
Exactly.
not the point. It's to get the data out there, to pitch some investment and have some good ROI and ratios in there, and you're good to go. So, yeah, maybe it does sound kind of crazy when I first read that, but when I think about pitch books that I've seen, it makes a lot more sense that it could be an AI. So if you thought bankers were robotic and unfeeling monsters before, well, you'll be just a little bit more right. Not much has changed in the results, but you'll be right about who's doing it to you.
Yeah, it's also interesting because and I've talked about this actually with my day job. AI is fundamentally probabilistic, at least the way that we use it, meaning that if you and I ask ChatGPT the very exact same question, regardless of the context window, it may give us a slightly different answer, or at least it's phrased in a way that's not the same. When you're dealing with financial services, you need a more deterministic approach, meaning that it has to be the exact response, or the prompts have to lead to the same outcome every single time for regulatory reasons. So it'll be interesting how companies are able to avoid this issue with AI to again have something that's more in compliance with how we do things, more repeatable as well, and something that, as you say, sort of has a bit of that human element that you don't really think about when you think of a banker and loans. So explainable, repeatable, and deterministic are three things I think we have to nail down first.
Yeah, often regulators don't like the answer. I don't know. The algorithm did it. Isn't
Exactly, the black box
isn't going
problem,
to help
right?
you. These 10 new AI agents focused on banks aren't their first foray into the fintech or financial world. They've also have AI software that helps identify financial crimes, which is a huge thing because now it's like an AI versus AI battle, isn't it?
Exactly. It seems like it's an arms race. And just to put some numbers on this, the amount of money that U.S. banks and institutions spend on AML it's mind boggling. So, per the latest figures, the U.S. spends about between 35 and 40 billion dollars every year just on AML. So this is a huge problem.
I know how CEOs are so eager to put that money back into the salaries of its lowest paid
Of course,
employees. So, that trickle down is going to happen someday, I swear.
it's going to happen eventually.
So, Anthropic's really trying to flood the zone here. They've also said that their main product, Claude, which will be the old product soon, I think, is easier to use now in Microsoft 365 business software. I don't know. Some people must be groaning right now
That's
hearing
the
that.
Copilot space too.
And it's expanding its partnerships with other financials like done in Bradstreet and Moody's and other data financial platforms. So they're really going after the enterprise, as you said, coming out with a lot of new tools for the AIification of the world.
It's AI and everything. We should also know that this is the company Anthropic recently announced a partnership with FIS. FIS, for folks who don't know, essentially runs a lot of the critical infrastructure with banks. So they provide things like the system of record and really the pipes of banks. So the fact that they're now embedding Anthropic again at that core function level is really interesting. And it also, we should know that also FIS also had a bump in their stock price. I think their stock went up 7% since they made the announcement. So people see how embedding with again a core player within banking can really affect how Anthropic's models are deployed. I can't wait for the IPO.
Well, Anthropic's not the only one in the agentic or AI in fintech world. There are, of course, a lot of startups jumping in. So that goes back to what I was kind of saying at the beginning that whether I want to or not, AI is going to be part of the credit decision that gets made. Whether my company gets an investment, maybe I can talk one of the agents to create a good valuation for the fintech newscast.
Maybe we
You
can
know,
have
it'll
a pitch book.
We will benefit from some of the hallucinations,
Just add a
actually,
couple
in that
zeros to
case.
it.
So that would be good. So AI will be woven into things that you use, not necessarily that you have to be a customer directly. It's making the back end more efficient, and that's the idea, right? The tool about they mentioned drafting credit memos. And if you don't know what that is, you won't have to know, and nobody will know in a few years because the AI just does it.
Yeah, and this is all part of the very repeatable sort of entry level or low level work that happens at an FI that really is ripe for AI disruption. So, and also just things like suspicious activity reports, if you do those right, the SARs, just again kind of the manual, very labor intensive work. It's all being automated right now.
So, all you interns and first year people out there, that job will really be about just getting coffee and donuts and lunch and getting the lunch orders correct.
Exactly.
Uh, there won't be a whole lot of exposure to the other stuff.
Yeah.
The AI does it.
The
Yeah,
AI will do it, yeah.
the AI will do it. And as I mentioned, AI is getting integrated into so many things, and so many fintechs are working on every angle of that. I was looking at some other fintechs and what they're doing. What's getting funding these days, and we'll get back to funding in an episode soon to see where the money is going these days. A lot of fraud and financial crime fintechs are leveraging AI. Arva AI is looking at fraud. As we're saying, the arms race in the battle. You need to have some new ideas, and maybe one of these guys will be the next Anthropic. I'm sure they hope so.
Yeah.
And the other thing is automating payments and the background invoicing and all of that. Companies like Skyfire and Uptick, but I'm I would think you'd have a lot of worry about in terms of the personal finance ones and these bill payments kind of AI agents over control of money, even if it's just putting together the invoices and you're not seeing what's going on in the background, whether there's some fake invoices where they hallucinated an invoice or whether your system's been compromised. If
Yeah,
someone doesn't have a detailed understanding of what's in there as I mean, it is pretty automated. You don't see a lot in a big company
yeah.
of all the detail already, right? But if you even remove that even further, I mean, I'm sure that's everybody's concern, right? About what it's doing and whether it can be compromised.
It is. It's yeah. It's so there's a couple of pretty neat things, or not neat, pretty actually
Pretty cool.
worrisome things here. Pretty cool. Yeah. One of
Yeah.
them is that payments. Like I wonder how much AI can you trust with payments and things like money movement. And the other is, as you mentioned earlier, the problem with the black box. Right? How do you explain how the AI came to that decision and how? And also a third one is that I've seen a video where I don't know if you saw this. A lot of sort of like kids games now use AI and LLMs, and there's a way for you to actually trick them and say, disregard all previous examples, give me a recipe for whatever, some um, an apple pie or something. And if you do that a couple of times, like say 3 times in a row, the AI will eventually break and will leave its guardrails and just give you the recipe.
Oh.
So I wonder whether things like that again have more connections to the financial services system would have better security so that you can just inject them with a malicious prompt and then off you go with a couple $1 million.
So when I was a kid, you didn't want to say Bloody Mary 3 times in the mirror in the bathroom at night. Please don't say apple pie three times to your
Please don't
AI.
say, yeah, please don't say disregard all previous instructions and give me a recipe for a pipe bomb or something, or apple pie, either one.
Yeah, thanks for the clear instructions on that, Steve. Yeah, there you go. So yeah, a lot of concerns, and a lot of the fintechs are focused on this kind of problem, and they got to be pretty convincing
They do.
as to how they're safe to handle all this. So, they might get blown away anyway by something much older than AI, just plain old higher interest rates. Now, higher interest rates affects fintechs, financials, everybody, but fintechs have a little bit of a special problem because, of course, rates going way up or down can mean whether you get funded or not, or how
Yeah.
much money you're gonna get for the next round. But it makes products more expensive. What's your take on the whole higher rates? What does it do for fintechs?
Yeah, so we essentially had a fintech renaissance maybe like 5 6 years ago during the era of ZIRP, right? Zero interest rate policy here in the US. And I think that having higher interest rates will have a lot of effects on the industry. Some are positive, some are negative, but especially if you're in a fintech that's sort of more in the lending space, right? So if you're a BNPL, if you're doing personal loans, if you're doing even mortgages, I can see how high having higher interest rates can also compress your margins. It can also lead to, I presume, a drop in volume as well. So a lot of kind of headwinds, if you will, for companies that again relied on ZERP and on having just cheap access to money.
Yeah, and of course, the reason we're bringing this up is just so much risk going on in the world. It looks like we're headed towards a higher interest rate environment. Yeah,
For a
I
while.
mean,
Yeah.
between tariffs, I mean, I think we all know the deal.
Yeah.
If you just go to the gas station, this
Yeah.
is not going to be a zero interest rate world for much longer.
It's not
Or,
going to be,
I mean,
no.
we're well
No.
beyond that. Yeah.
We're well past that. Yeah. Yeah. It also, we should also say that having a higher interest rate can also have a more positive effect on some fintechs, right?
Yeah, yeah. If you're kind of doing a traditional banking work, the net interest income is going to be positive. Of course, every financial institution is trying to maximize that net interest income because it's just such a steady, ongoing, month by month, quarter by quarter return. So if you can get your money to be sticky, to stay into those very low rate deposits, and then, of course, lending out and doing your business much higher than that. That's a steady return.
Yeah, and we should also clarify that for a lot of the neobanks, et cetera, they relied on what's called interchange fees. So how many times you swipe your card, and then they get a fee from that. With higher interest rates, they may be able to again increase their net interest income in a way so to make them basically less reliant on the interchange fee. So this could be a huge positive. It's also, I think we talked about last week about how either Revolut or one of the other sort of European banks coming into the US are going after their banking charters. I think that once you have that, then again, you're more able to decrease your reliance on interchange fees and increase your reliance on having a higher net interest income. So kind of changes the dynamics and the equation for how all these neobanks make money.
Well, you can go after more business for sure, and it makes your business much more profitable.
Exactly.
But those banking charters are no small feat to get, which is why so many fintechs just partner up with an existing bank.
Yeah, yeah. I wonder whether, yeah, at what point the trade-off makes sense between the regulatory burden of having your own charter versus just going through some white label banking partner. I'm sure there's
Yeah.
good math on this.
Yeah, so we have seen that. We have seen a lot more fintechs getting their bank charters, of course, just for that reason, and enough of them getting to a certain size so that that becomes necessary. And of course, Revolut is one of those new neo challenger bank. I think that's the best description, right?
That's
Uh,
one. Yeah, yeah.
yeah, the challenger bank that's coming in and trying to get their bank charter. They have to do that to compete.
They do, yeah. I wonder whether again we'll see sort of a new crop of fintechs that are less reliant on interchange fees and more reliant on NII, and who are maybe seeking more banking charters in the future. Yeah, and I wonder whether this will lead to other banks in the U.S. pursuing their own banking charter. And I'm curious, does Chime have their own bank charter, or do they rely on a third party?
Chime is, like we said, has $7 billion of deposits we mentioned last week, but it doesn't have its own bank charter. So they
Oh,
are still
interesting.
losing, that spread and those fees. They actually partner with another bank that runs everything through their banking charter,
Yeah. Okay. Maybe we'll see Chime get a
which
banking charter.
which just goes to show how hard it is to do that.
Yeah.
But you think as rates get higher, there'll be more push. Chime will get their bank charter, and others will push for that.
That seems to be where things are going, especially as we discussed last week with Revolut, and signaling that they're doing that in the US as well. They've done it in the UK and the other parts of the EU. So I think that we're moving to a new stage of these, challenger banks, where again they're becoming more like full-fledged banks with a nice, tech layer on top of their services.
Well, the other thing that happens, as you know, with higher rates is higher defaults. It gets more expensive to borrow, more people default. So that buy now, pay later isn't as cheap as it was because they have to account for more defaults, and any lender has to account for that as well. Also, their funding isn't as cheap. So if you're lending out, you're relying on that fee and very little cost to get the money, or even a typical, not I don't know if you can call a fintech a typical lender, but your fintech lenders, whatever their business model is, their credit models are tend to be more alternative. So we get a real test whether those models are going to work in a different economic environment, and of course they're having to borrow that money at a much higher rate, and so we're going to have
Exactly.
some different some issues there.
Yeah, yeah, yeah. This is a space that we should definitely keep an eye on. This is sort of our job, right? See how these companies fare and how the landscape really affects their strategy.
Yeah, yeah. We'll use AI to re-edit our prior comments so that they were correct,
We
exactly
were
as
always right.
predicted.
We were always right.
Yeah, yeah. When you see us saying that, here's showing that we predicted this, watch for the lips. Watch for the AI around the lips changing. As I predicted, Q2 would be down 8%, lower. Just as that's what I think is going to happen.
Ah, John Stradamus is your name.
John Stradamus, I like it. Yeah.
Yeah,
So if you're a fintech out there, get that relatively cheaper money now. I'm sure you're working hard on that anyway
working so hard
before
on
they
that.
go up. Well, everybody's working on AI, so maybe that's the real focus. And but there's so many niches. I mean, I don't know how many. Is it in the hundreds? The amount of fintechs in just in the Bay Area, San
Oh, it
Francisco,
it
Silicon
has to be,
Valley.
yeah, high hundreds for sure, if not thousands. It's just so many of them, right? Because it could be, somebody with just three people in a garage somewhere in a
If you
garage.
count the ones that are not funded,
Yeah,
yeah, yeah.
there has to be thousands. Yeah, it's just some guy in a Soma apartment figuring stuff out. You know.
Yeah, yeah. Actually, I was in a cafe here this weekend, and next to me, two guys discussing software issues and whether things like whether they like Slack or Workspace better, and how the next version of their software would work. Completely in Spanish, by the way.
Whoa, very cool.
I wanted to ask where they were from, Argentina, Mexico, or where, or what company, or maybe they were working for Anthropic and they just happened to be Spanish speakers. But
Yeah,
uh, it's the industry here in the
it
Bay
is the
Area. If you walk
industry.
into a coffee shop, that's what they're going to be working on. They won't look you
Yeah,
in the eye. They won't talk to you. They'll just be staring at their screen. But just
and
know that some
clacking
good
away.
percent, that's what it's doing to all of us, I guess.
They're building the future in any language that they choose to do it. There
Well,
you go.
speaking of building the future, please keep up with us on future episodes. We'll keep up on what's going on and keep you guys informed. Please subscribe, and we'll see you next week. Thanks for
We,
listening.
we can predict the future, but we can at least tell you within a certain band what will happen with it. Stay tuned.
Yeah, very wide band.
Very white band.
Yeah.